Good afternoon, everyone. Morning for some, evening for others all over the world. Welcome to today's live trade session for TPO. Of course, today is 121, and like always, we just have a ton of stuff to go over. Of course, we did have to skip one call because the markets were closed on Monday, so we did not have a call on Monday. So we have a little bit of extra to go over today. Before we get started, I do want to remind you again, if you have not watched the presentation on how anyone can own stock in Trade Partner, you can be a part owner of the trading platform that you use. It's a unique situation, and I did a presentation on that. If you have not watched that, you can contact support. They'll get you a link to watch that presentation. All right, that's the only announcement that I have for today. So if you are new on the call, I do want to welcome you. And I also do want to warn you that I don't explain everything about these trades on a single call. It's impossible. Can't do it. There's too much information. I'm going to be flying through some stuff today. And these calls are designed to be cumulative so that you attend one and you build on what you learned from the last one on the next one. Since I do these twice a week, you'll get the hang of it fairly quickly. However, if you're expecting to attend this call and understand everything that I say, and you don't, and therefore don't attend any more calls, you you have the wrong expectations behind this. This is by far worth every minute of your attention if you can learn to do what we are doing. And I also do want to warn you that if you do stick around and you watch these trades long enough, you'll realize that there are some fantastic trades. However, they are not the holy grail, and there are risks, and you have to accept those risks. So what you don't want to do is you don't want to look at these trades and say, "Oh man, this is a great trade, and I'm just going to go all in." You start small, because if you make mistakes or if you analyze the trade that you're in wrongly, so that the market makes an adverse move and you end up losing more than what you thought you would lose, you'll be in trouble. And that has happened several times. And I'll even talk a couple of. I'll take 1 minute to talk about a comment that I received earlier this week on these. But nonetheless, you want to start small. You want to make sure that you're not reckless with how you put the trades together, and you want to make sure that you follow the instructions. And one of the things that I've done over the past couple of months, every now and again, is I've said, "Hey, if you're not successful doing this yet, then here's what you need to do." And I say you need to simplify. You need to focus on one thing, and you need to make sure it's a high probability trade, and you want to take a profit. Be very aggressive at taking a profit. You want to start experiencing some success, and that kind of flies in the face of what most traders out there want you to do. They want you to go big. They want you to make big profits, big gains on these trades, and $20. Really, I'm making a $20 profit, and I'm supposed to get excited about that? Yeah, actually, you are, because we're not focused on the strategy to create wealth. We're focused on the compounding of that strategy to create wealth. And so if you can average $100 a week, and you're not going to do that at the beginning, or at least you shouldn't expect to do that at the beginning. There have been some that actually have done that, but you can't expect that at the beginning. But if you can average just $100 a week on certain of these strategies, on certain of these types of trades, and you compound it, you're talking about significant growth over just a period of 6 months. This is a 6-month compounding table here, based on averaging $100 a week. If you compound that, you're talking about growing a small account to $30,000 in profits in just 6 months. If you continue that for 5 years, you're talking about almost 3.4 million if you stick with the compounding plan and you're able to average $100 a month, or excuse me, $100 a week through these strategies. Now, if you can't average $100 a week, that's fine, because if you only average $20 a week, you are going to be doing better over the next 5 years than if you would have bought Netflix at $10 and exited at like $350 a share. If you threw $5,000 into Netflix at $10 a share and wrote it up, you'll actually do better by averaging $20, $25 a week and following the compounding plan. It's absolutely amazing what the compounding will do. So focus on that. And when you understand that the wealth comes from the compounding and not because you just made, just this bonkers of a trade, it comes from consistent small gains, and you'll be shocked after you begin following that. All right, so I'm going to start with the strategy that I normally start with, which is not the one that you can compound efficiently. But I did mention in one of my calls about being able to cross compound, and this is why I take these trades, because the strategies that will compound really efficiently don't take much money. And so if I've got more money sitting somewhere or here, and I want to help compound faster the strategies that do compound faster, I can do that by taking some of these really high probability trades and adding $100, $150, $200 a week to the account, and do that way. Now, these take more money, but I'll talk about that just a little bit today. But they are really really high probability. So in the last call, I had gotten into a trade a couple of weeks ago, and this is a 5-to-1 option insanity trade, and I got into it at a credit of 190. And then the market moved higher, and I was starting to take a loss. In fact, it went to like $400, $400 credit, a little bit more than $400 credit. I actually added to it at that point. And then on Friday, so Thursday, the market was trading around 382, somewhere around there, 381, somewhere around there. We're taking a little bit of heat, but it's still not even up to the, it wasn't even up to the mid peak of it, right? So on this particular one, I'm not in it to make the $500, the $600, $700, whatever is possible on these. That's not why I'm doing these. I'm doing these to try and average about $100, $150 a week. And so I've been in this trade for a couple of weeks, and then the market moved down on Friday, and ended up hitting a $10 $10 debit target. And I say debit. If you're exiting, you flip it around, and it's actually a 10-cent credit. So I got in at a 190 credit, and then I got out at a 10-cent credit. And I know that gets confusing for you guys, but that's actually, the spread was at a 10-cent debit, which gave me a $200 profit. All right, I'm not gonna spend a lot of time explaining the debit and credit thing. I think everybody understands what it is. So I took a $200 profit on this one and been in it for a couple of weeks. So it was about $100 a week is what it averaged out to. And again, this is not the one I can compound really quickly. So it's not the purpose. It's to add to the account so that I can compound my other strategies a little bit faster. It's called cross compounding. I'm not going to go over that today. I know I said I was going to, but I didn't. I should have thought about this. Since we had to skip Monday, we have to cover more today. So I really want to. I want to talk about that more when I have a little bit more time. Right. So what I did after getting out of that one is I rolled into another trade, going out another week. So it's about 3 weeks out. This one, a little more than 3 weeks out. And it's a 1-5 again, 5-to-1 option insanity. 382 is the long, 392s are the shorts. And you'll notice here that I did it at a 285 credit. So I actually opted to go with a little bit bigger trade, bigger credit this time, a little bit closer to the money because of the move higher. I just felt like, as we're continuing to see these moves to the upside, that there's going to be some resistance. It's not just a clear open field of movement to the upside. Now it could absolutely do that, right? But that's not the probability. And so I'm playing it on probability. And besides that, there's a lot of time value on this. So if the market were to shoot up, let's say to 390, this is going to be losing money immediately. But if I hold on to it for a week and it just pauses for a week or even comes back down, then I'm going to have a nice profit. Right. And that's how it works. And so I went for a little bit bigger credit on this one to go for a little bit bigger profit because of that, and got filled at a 285 credit. Again, the break even on this is not until about 394. If I were to hold on until absolute expiration, which of course I haven't held on to one of these until the absolute end of expiration. I don't think I've done it yet. I may have and just forgotten. I don't know. I've been in a lot, so they tend to run together. Nonetheless, that's the one I rolled into. That's the one I'm trying to do, $100, $150 a week. And I obviously have a very high probability of being able to do that. Well, then the market moved up a little bit more. And so what I did was I went back into the 2528 one. I went into a 2528. This is again a 5-to-1. Only I did something a little bit different, and I'll explain why I did that here in a minute. Because I know you guys, there a lot of you guys were saying, how do we, what about doing a 2-to-1? What about doing a 3-to-1? What about doing a 4-to-1? 5? So I'm doing 5-to-1, supposedly, because it brings, further out break-even level, bigger credit, bigger profit bubble, et cetera, et cetera. Well, I've been doing a lot more analysis of these because I plan on doing a presentation for you guys focused only on this particular option insanity approach with a 2-1, 3-1, 4-1, 5-1, et cetera. Right? It's a lot of work to do all that, but I needed to do it once and for all and have it, kind of give it out there for one, in one presentation that you can go back and look at and make these comparisons and decide how you want to trade this if you want, because these cost a lot of money to place on, a lot of margin. And so if you can do a 2-to-1, it's not as much margin. If you can do a 3-to-1, it's not as much margin as a 5-to-1, et cetera, et cetera. It brings it into play for you guys, for more of you guys than the 5-to-1. I talked about doing a 5-to-1 and telling traders, look, basically, if you want to do a 5-to-1, you want to do it in a $50,000 account. Otherwise, I wouldn't do a 5-to-1. I do a 4-to-1, 3-to-1, 2-to-1, something like that. But my research has shown that you actually can do 3-to-1 and pretty much generate the same graph. So if you can do a 3-to-1 as opposed to 5-to-1, you're better off. So I'll get to that here in a second. And we'll probably switch to nothing but 3-to-1s, but we'll see. Again, these have not been around that long, right? So, Monday, Friday options have not been around that long. So we're just really getting into the point where we've got some pretty decent history on these and can make some pretty good projections on the accuracy of these. All right, so let's switch gears for a second and go back to the crazy calendars. We were in a trade last week that had moved up. Market had moved up. I think it was a 374, 379, and then 377 calendars. And the market was trading 380, 381 ish, and we were losing money. And holding on to it obviously, but I added a trade that was further up to try and generate a little bit more credit. So the market would have to go, even further up. And you do have to be careful of doing that because you're talking about doubling your risk. In theory, if the market continues to move higher. All right, so on this one, I know some of you guys were concerned about it. We're trading at 380, 381, 382-ish. And on last Thursday's call, I said, here's my plan. I'm going to exit the calendars at 85 cents if it gives me the opportunity, and then I'll exit the diagonal spread and just make sure that I have a net profit on the two, right? So sure enough, the calendars actually exited before the close on Thursday, which I was, quite frankly, I was surprised that it happened, but it did. And so I exited the calendars before the close on Thursday. Then Friday morning, exited the diagonal spread and ended up making a net gain of $130. And as it turns out, Friday the market dropped down pretty hard. Matter of fact, and the calendar spreads at one point were trading at like $1.10, maybe $1.20. In one of my accounts, I actually held on to some. I won't get into why I did that. I just won't get into why I did that. I actually held on to some and ended up making like $1.10 at one point. But they really didn't get much higher than that, because then the market moved down to like 375, 374 by the end of the day. And I left about, I want to say I left about $100 on the table on this particular trade. Just simply because of the market moving down. I could have gotten out of that diagonal spread for a lot less. Actually made money on the diagonal spread, but that's not why I'm doing these. I'm not doing these to maximize the gain. I'm doing these to just try and eke out a small profit. And as it turns out, this one kind of forced me to hold on to the trade right up until Thursday's close, and ended up doing fairly well because of that. So that was one. Then there was another one that we had on that was a bigger credit. It was further up, and I specifically put this on because of the fact that I was in a loss on the other one. So this one would create a gain, a significant gain at 380, 381, 382, 383, even all the way up to about 384. But the purpose of this one, this is a core trade to place on risk-free calendars, which I was able to put on a couple of risk-free calendars at the 388 level. But the money was made off of the core trade because of the move down and the fact that there was a credit on that core trade. So that one worked out fine. So last week was one of those weeks where it didn't look like everything was going to be great, but everything was profitable last week. Absolutely every single trade that I exited was profitable last week. So you don't get, I mean, we've had those a couple of times, several times actually. All right, so let's backtrack just a second and revisit a couple of trades that I had on, because one of my things is that I encourage you guys to do is to follow through even after you exit the trade. Follow through the trade until its expiration, so you can watch the price movement. The value of the trade as the market is moving, right? So one of the trades that I had on was this. It was a 5-to-1 option insanity. In fact, here's what it was: 5-to-1 option insanity. It was the one that I filled on at the end of December, and I basically got out the first week of January. Right, so I held on to this trade for a week, took $150 profit. Well, it actually didn't expire until 122, 125, which is tomorrow. And you can see here right now that that thing is at a $550 profit. And the reason that this is showing up here is because they don't have the spreads module fixed to where once you exit the spread that it actually takes it out of the open position spreads. So I'm not in this at a $550 profit. This is just showing what it would have been had I still been in. I took, again, on this one, I took about $150 profit target in 1 week. Had I held on, it would be looking at about $550 with the market trading around 384. So we're kind of, this is a 5-to-1 where the long was 376 and the short fives were at 386. Right, so we're getting close to that short leg, but because of how much time is left, this thing is at a $550 profit. Not bad, can't complain. This other one, this is the 2-to-1, and I was in several of them, as you can see. I have no clue why I guess I turned it on 3 times by accident. I don't know. But got into the spread at 80 3 times and at an 80-cent credit. And what it was a 2-to-1 option insanity, and it was closer to the market. You can see this was filled on 1228, and it was filled when the market was trading around 368. So this is way out. This is, the if let's take a look at this. This is where it was. So yeah, 368.50 is where the market was when this thing was filled. 368.50, way down here. The market had to go way up here and then all the way to 380, which it did fairly quickly. And I was at one point I was taking a small loss on this trade, right? It was actually making $34 fairly quickly. I had a $50 target in at the time. That didn't get hit. Then the market moves up, and I'm like, okay, let's just see what happens. And if I can get out at a decent profit, then I will. And the profit peak is at about 380, and the profit peak is showing at about $250, $260 a piece, which is pretty significant. So we'll see where this ends tomorrow, because this trade does end tomorrow. I did go ahead and get out. I got out as of last Friday. It was trading at like a $131 profit. I actually got out at $135 profit. Last Friday, when the market moved down, I went ahead and took a decent sized profit. And the reason I did that is because if the market kept going down, then I would only make $80. If the market moved up, yes, I would be in a profit zone. But if it moved up too fast, too far, then we get to the point where I'm, getting past this risk, or past the profit zone, which is exactly what happened. We actually got up to 385 yesterday, and I would have been like, oh boy. And this actually went to a loss at one point yesterday. Now, again, I was already out $130. But you follow these trades to the end so you can see, hey, you know what? I'm glad I got out at $130, at $130 profit on that, because 135, excuse me, because you see how early exits play into the probabilities. You actually increase your probability of success overall significantly by getting out at a profit early, because you're taking time away from the trade, of the ability of the trade to move against you. And so you're actually increasing the probability of success. And so it's good to watch that, because I would have been kicking myself yesterday when the market shoots higher, 500-600 points. It's trading at 385 now. Now we're past my profit zone completely. And if the market continue moving up, then I've got risk there. I've been in this trade a long time, $130, perfectly happy with that that profit. And away we go. And I'm able to replace it with another one, right? All right. So I'm going to go ahead and I'm going to wait on the new trade for that right now. I want to stick with the option insanity for just a minute and show you a couple of different things. All right. So I'm going to move this over. All right, so here's, of course, PDS Trader. And here is the 5-to-1 option insanity trade that I have on at a 285 credit. Okay. Break-even point is way up here at 394.50. And it's probably actually a little bit higher than that. Because if the market moves up there, volatility is going to come out of these shorts, and it's the third week, or the third Monday of the month, which there's nothing that goes on. And so you would see, if the market moved up to 392, 393, the majority of those would probably be not worth a whole lot, right? So that's pretty close. Nonetheless, the profit potential on this, profit peak around $750. $285 credit means that if the market tanks, I'm going to make $285. And that's going to, that's definitely going to get me my 3-week or my $100 average. Even if I held on until the last second, if the market tanks, of course, if the market tanks, I would replace it. I go ahead and add to it, replace it, and increase my average from that. So that's that trade. But I also, when the market moved up, I also did this one, which is again a 760 credit, and this is the 2.5 to 2.8. Now, why did I do that? Well, I'll tell you why I did that. I'm going to bring this down, and nope, not that one. That's the 380, 383, 389. All right, so let me bring down 383 and this one. All right. So this is, I'm going to reset these and drop this to 3 and then generate. All right, so let's go to this one, 383, 389. Okay, this is the trade that I have on right here. And I have this on at a $760 credit. And look where 1 week later it's at. The same trade 1 week later is at 46 cents credit. That's a $700 week in time decay on a 3-to-1. Actually, you know what? This is my 5-to-1. So sorry, this is my 5-to-1. I do so many of these, I confuse myself sometimes. Sorry. Let me redo that. We'll get to the 3-to-1 here in a second. All right, so moving to the 383, 389, 3-to-1. Okay, that makes more sense. $3.50 credit. Okay, I'm in for 760 credit. That's a $400 time value. $400 time value in 1 week. If the market goes nowhere or moves down, I'm going to make $400 on this trade. And so I did it because I felt like it's a good spot for a pause. The break-even level is still up there at around 392. And this one is only 2 weeks out as opposed to 3 weeks out. So the time is really going to start bagging on this one. And so if I can, if we move down, I'll hold on to it. If we move down, I'll hold on because it's an extra $300 until I get about a $700 profit. Okay. If it starts moving up, I'm going to take a profit much quicker. And so I'll just kind of play it by ear and see what the market does and see, where it's at. But, I have no intention of holding this thing until it gets past 392, if at all possible. Okay. So that's the plan with that one. All right. So now let's bring in what I was going to show you with regard to the difference between the 3-to-1 and 2-to-1. All right. So here is a 382, 392 trade. I actually have this trade on for the following week at a bigger credit, 285 credit. But this is the 2528, and it's a $208 credit. And this was, you could get this at a 208 credit when the market was trading around 379, which was last Friday. And this is when I was looking at these because I was replacing the one that I had just exited, right? So on this one, again, the 5-to-1 makes it difficult for a lot of traders to place on because you got to deal with 5 margin hedges, and the margin on this is going to be about $10,000 to $12,000, depending on depending on what you have to, how far up you have to go with the margin hedge. And so with this one, I want you to notice the market stays below. You're talking about $200 gain. If the market, which we're still below this, right? We're still below the first strike, which is, why does that say 384? Something is awry. That should be 382. So I'll fix that here in a minute. Nonetheless, you see this particular graph. It's very, very, very similar to a 3-to-1, where you have a 5-point difference in your long to short. Okay, on this one I have 10-point difference. On this one I have a 5-point difference, and the graph is very, very, very similar. And so if I were to do this, and this is based on current, actually it's not based on current prices. It's actually worse than current prices. If I were to do a 2-to-1, it's a small debit, right? But it has a huge profit bubble. And the break even goes way up there, 396-ish. And then if I do a 3-to-1, that's what creates the credit, because it's a 220 here, right? So it's an extra, let me pull off that one. And let me update it. And I go from there. All right. So that's what creates the, similar to the 5-to-1, where you have to go a little bit further. You can go a little bit further out with the shorts. Then you go 4-to-1, and all of a sudden you have a $432 credit with this one, and the break even is still at like 393, right? 392.50 is the projected break even, and that's going to be pretty accurate. Actually, might be a little bit higher than that. But you have a 400. I mean, this is a huge, huge profit zone, right? And then you do a 5-to-1, and obviously with the strikes that are that close, you're going to be giving up some of this profit zone, right? So let's do that. And so you still have about the same break even. You have a bigger credit, but you don't have a smaller profit bubble, right? And the profit bubble, the bigger the profit bubble, the higher the probability that you'll have a profit as the market's going through that price zone, right? The lower the profit bubble, the lower that probability is. And so that's why I like creating the big profit bubble, is because it gives me that higher probability. So from the standpoint of a $2 credit, you're looking at nearly the same thing, slightly different strikes as the 5-to-1 or 3-to-1 credit. Your 3-to-1 option saying you're looking at nearly the same risk graph as 5-to-1. And so you can compare these and decide, how you want to do it. If you do, this is the exact one that I actually have I have the 5-to-1. You can do a 3-to-1. And look for the $2 credit. This is a 6-point difference. You can look for a $2 credit, and you can go all the way out to 384, 390. If you want to go a little bit less than $2 credit, you can go 385, 391. Right. So you can actually pull in very, very similar trades through the process of going 3-to-1. 2-to-1 is a little bit more difficult. But with 2-to-1, you can actually create trades that just have this ridiculous probability of success, which is why no one should be worried about if they're only able to do 2-to-1s. Where's my 2-to-1? Let me find it here. Well, I had it, and now I don't know where it went. So let me throw it up here real quick. Actually, let's do a 2-to-1 search just to see what we can do. And we're gonna do a 5-point difference. Whoops. You don't see what I'm doing just yet. I'll bring it down here in a second. And so I'm going to do a 5-point difference, 2-to-1, and we will do and generate the spreads. This is 2528. All right. So how far can we go and get a credit with a 2-to-1? Here's 388, 383, 388. That's a credit of 88. 384, 389, credit of 61. The profit peak on these 2-to-1s, the middle of the profit peak is at the short strike. Okay, so when you have a 384, 389, that's your middle profit. That's your highest profit peak on the trade. This is an example of that. The trade that I had on 375, 380. My short is at 380. That's the profit peak of this trade. Right? So you can put this trade on with a $10,000 account, and you have a very high probability of success. Your margin hedge, because you're able to go 2528, it's not going to be that far up, but that's a 60-cent credit for 384, 389. Okay, 37-cent credit for 385, 390, and 20-cent credit and 8-cent credit. I mean, if you wanted to create this huge profit bubble at 392, this is what you could do. You could absolutely do that with this particular trade, and it's not going to be huge. I shouldn't say huge. The 2-to-1, it's not as big. You're looking at maybe $250 profit bubble at that short. Okay, so then let's take a look at doing a 2-to-1 that is 1 week further out, and then we're going to get into the crazy calendars for this week. Let me bring that up. This is just such a powerful trade. Eventually, everyone will want to be trading this. You'll grow your account enough that you're going to say, okay, yeah, I definitely want to have that in the repertoire, if you will. So let's see here. I'm going to go. We're going to go 12 to 16. Whoops. And I'll bring this down here. So we're going to do 212, 216. And we're going to do 2-to-1 on this. Alrighty. So we'll go buy and sell. And go to 2-to-1. It's a 5-point difference. Let's take a look from in the money, 375s all the way out to the 395s. And by the way, everybody has this. This is on the normal, these pattern spread generators on the production version of Trade Partner. So everybody should have it. Okay, so let's go out to 385, 390. Well, maybe. So the problem with the 216 is that there aren't the same strikes. So there are some where you don't have a trade, right? So there is no 388, 393 because there's no 393 strike that ends on that. So let's take a look at the 387, 392 for the following week. 387, 392, that's a 92-cent profit. Compare that to the 387, 392 for 1 week later. It's an 8-cent credit. So in 1 week, if the market goes nowhere, you should make about $100, $90 on this trade, $90, right? So that's the time value. If the market goes nowhere, that's the time value. Meanwhile, you have a scenario where the profit peak is at 392. All right, so that's the profit peak. We have to move down 1, 2, 3, 4, 5. We have to move up 6 points in 1 week before this is still a break even. This would be equivalent to a 382, 387. And so if we move up 6 points in 1 week, then this trade right here would still be a break even. That's why I go out this far away on these. It's because there's a lot of time decay that are associated with these. So if I'm going for $100 a week, you can do that with a $2 2 to 1, and you can compound that much quicker. It's still going to be slow compared to crazy calendars, but you can compound it much quicker, and you can still add money to the account for the compounding of the crazy calendars, or to help with the compounding of the crazy calendars. Okay. All right. I could spend, like I said, I could spend a lot more time on that one. So let's just move on now to the crazy calendars. And I did a presentation for a group last night, and I put this trade on yesterday. A little bit different for a couple of reasons, but this is the trade. Short 3 February, so basically 390 calendars, and 390 calendars were at about 20. I want to say 29 cents a piece is what I got filled on. I did 3 of them, and then I did a simple diagonal, 4-point different diagonal at a $1.24 credit. And on this particular trade, the calendars were 2 points above my short. So, and because my diagonal here, the 388, 392, was a 4-point difference, it split them, right? So the 390 calendars basically split my diagonal spread, and that's basically what this trade is. The blue line, of course, is the combined trade. Yellow is the calendars. The red is the diagonal. And again, here's a scenario where this thing is at a break even at 392. It goes out about 2 weeks. So we have to, basically move another 8 points by expiration over the next 2 weeks before this hits break even. At the time that I put on this trade yesterday, the probability was at 77%. Okay, so 77% of the probability that the market was going to stay or close, I should say, below 392 at the time that this thing exited. And that's not a huge probability for this type of trade. And the credit on this is $37. So I specifically did the 3 calendars instead of 4 calendars because I wanted a bigger credit, because I felt like, again, with the move higher, that we were probably going to pause, and I wanted to lean on the more of the bearish side of the equation on this thing. And so that's the one that I did yesterday, and we're going to take a look and see what's available now. I also did this as an example of one where you can put on the entire order in one shot. I'm going to do a pattern finder, and we're going to take a look at the different prices of those that are basically essentially what this is. So let's see here. This is February 5th and February 8th. We can do the same thing, by the way, with the with going out another week and seeing if there's any time value and doing it another week out. Okay. All right. So I'm going to go 3. Whoops. What in the world? I'll bring it down here in just a second. It's giving me fits. All right, there we go. Whoops. Well, I just screwed it up. This gets caught between windows. I have 6 windows and I brought it down, and there we go. Sometimes it gets to where I can't move it. Right, it gets stuck. I don't know if any of y'all have that problem. All right, anyway. So we're going to take a look at 2.5, and we're going to do the same thing. 388 sell, and a 392 buy. So that's a diagonal. Wow, that's going for exactly what I got it for yesterday. So we are moving up right now. So this is a $1.24 credit, and then we can add. Stupid. Right. We can add the 390 calendars, sell and buy. With moving up, I don't know that we'll be able to get the calendars at the same price. So we'll see what the whole thing is going for. So I got filled at 37% credit. So yep, the calendars going for a couple of cents more because we are moving higher at this point. And so this thing is at a 31-cent credit. That's still worth it. But let's take a look at all of them just to compare prices. And it's going to take, there we go. Maybe. There we go. All right, so here's the one that we have, 380, 384, 382, 382. Nope, that's $1.37, $1.24, $1.09, 67, 54, 43. This is the one that I have. It says 31.32. And you can still create a credit all the way out to 391, 395 with 393. So this creates a profit bubble at 393, at the 393 area, and you have a credit. And so this one is like, if you move up to 395, you're going to be looking at a small profit on this trade in a couple of weeks. So that one goes way out there. And that's the closest one you can bring. All right, so let's do one where we look at the following week and see how much time value is on here. Because if there's time value, I'm just as apt to do one that's further out if I can capture time value on these trades. On these, you don't usually, there is a limitation, and I'm not expecting there to be a tremendous difference in the prices. So I'm going to stick with the 381 and 385. And then I'm going to do the 383 calendars. Oh, can't do the 383 calendars because the 216 does not have 383. So let's change this just a bit. You can't see what I'm doing yet. You will be able to in just a couple of seconds. There we go. All right. So here's the pattern. 380, 384 is the diagonal, 212, 216. Here are the calendars, 382. We're going to do 3 of them. Okay. So 380, 384, 382, 382s. This is basically, we're basically past the profit zone here already on this one. But it's only trading at a $1.29 credit. So we'll do the same thing, 376, 396, and 1. Generate the spread. And it's got to filter through all the ones where there's no expiration. And then there we go, pop the prices in. So 388, 392 with 390 calendars. Look at this. It's only like a 15-cent difference, and actually less than 15-cent difference in time value. This is why I would not do this particular trade going that far out. There's just not enough time value. Okay, what if we, and this is the exact trade I did for 37-cent credit yesterday, and it's trading at like a 31, 32-cent credit right now. What about the one that expires the week before that? And so we kind of do the same thing just to compare all prices. And by the way, they are working on a scenario where once I put the spread in, I only have to put the spread in once and I can toggle the different expiration dates. I don't have to put the spread in every expiration date that I want to generate the pattern. So that actually will create a grid. As you guys know, they're constantly working on new stuff to make it easier to compare prices and find the best trade, et cetera, et cetera. So let's take a look at 129 21, doing the same thing. Sell, buy, and 383 calendars. All right. So here is the following week. Do a 3-to-1. 375, 395. We'll stick with that. And we'll go to the waiting for the prices to load. Tick tock, tick tock. There they go. 388. So 388, 392, 390, 390s. 7 cents. So like that's about a 40 to 45 cent time decay. With the 2528s versus the 12921s. I like that. That tells you which one you want to do. You can't get a 37-cent credit unless you go almost to where the short in the diagonal spread is at the money, to slightly in the money for next week. And of course, you're paying 44 cents for the calendars, so that's part of the reason why. So, so next week is not the one to do that one on. It is the following week, and you can do this in one order. Doesn't have to be 2 orders. That's again one of the reasons why I did it this way. I simplified it to create that. And let's see, 388. So we're actually gonna place that trade. Now I got filled on a little bit better price yesterday. That's fine. And so I'm going to say credit of, I'm going to put it at 32 cents. All right, so that will be the official trade that I'm going to try and get into. Makes it really simple. Whoops. And we'll see if I get filled. All right, there are several other variations that are available. Obviously, I can't go over all of them, but I will spend a little bit more time on the crazy calendars in Monday's, this coming Monday's call, because I spend a little more time in option insanity than normal. All right. Please allow me a UVXY question. Is liquidity not a concern? Not difficult to get a buyer for in the money UVI option? One, I'm not sure what you're saying. Not sure what you're saying. Not sure what you're asking. And I haven't really talked about UVXY in this presentation. I've actually put together a presentation where I use UVXY to pay for calendars, but I hesitate whether to bring that into this group or not, or to make it a separate presentation, because it is different, but I don't know why liquidity would be a concern. All right, let's see. When you drop the volatility in PDS Trader graph, how much or what percent do you use, or do you enter values directly, and how do you decide what amount to enter? So for example, oh, here's the one I was looking for. Ridiculous. How did I find this when I wasn't even looking for it? So this is the 2-to-1 that I was trying to find earlier, where we just went way out of the money with 392, 397s, got a 69-cent credit. Putting a profit bubble right at 395.5. Oh, this is a 3-to-1. That's why. That wasn't a 2-to-1. All right, so this is one of those 3-to-1s you go way out there. All right, sorry about that. Anyway, what do I do with the volatility? Well, here's volatility. If I were to, and I don't want to screw this up because this is my actual price, but if the market, if my short call here is way up there, I'm going to drop this thing to 0.09, and it might be less than that by the time we get up there, which would be a good thing in an option insanity. But 0.09 is almost for certain going to be it, because market trading this high up there, they're going to run the value out of these 397 calls. So I would expect probably maybe 0.078, 0.08 ish would be reality. So this one actually, I'm being conservative here. However, in the on Friday, when the market moved down, let's see if I can't find one where that one. Here. And Friday, when the market moved down, this is actually where it closed at 0.11. Right. So here's the issue: is that if the market moves up, you have to, if you want a proper projection, you got to put this at like 0.09, just to give you, not a proper projection, but just to be on the safe side. But if it moves down, it's going to retain more of its value, and which means that you can put it at a, so what happens is you can't say, okay, if it moves down, do it at 0.11, but if it moves up, put it at 0.09. And I don't know whether we're going to be able to make something that granular in the next PDS trader, but we'll see. Let's see. I'm having trouble finding 2-to-1 option sanity trades. Can you do one live and walk through what I should be looking for? You bet. So already did. So we did the pattern finder, right, of 2-to-1s. What did I do with it? I just cast it aside. Here we go. So 2528. Yeah, we're going to do 212, 216 2-to-1s because you can get a bigger profit. And that is one that I cast away. So let me do this. 212, 216, 2-to-1, 375, 395, generate spreads. All right. So if I were to do one, I wanted pretty high probability. Profit peak would be at 392. This is the one I do, and I do it at like 90 to 91 cents. This is a 387 long, short 392s. Problem with this one is that you're going to have to go to like 425 on the hedge, and so you are looking at $5,000-$6,000 in margin for doing this one. But the probability on this one's very high. In 1 week, this is if the market goes nowhere, this is trading at a debit. So in 1 week, even though this is 3 weeks out, in 1 week, if the market trades nowhere, you'll be making $100. Okay, so that's the one I would do. Can you provide us with PDF template strategy for the crazy calendars, risk-free calendar spreads, the way you did with the RFP, so we can walk through step by step? I'm actually planning on. You guys con me into this. I swear you do. You like ask the questions where you force me to tell you what I'm working on, but I don't like telling you what I'm working on because I don't know when I'm going to get it done. And so I put the expectation out there. You guys are, something that I'm doing and you guys want to see it and I don't get it done in time, et cetera, et cetera. But you always ask the wrong questions. So I'm actually working on a playbook that will include several variations of several of the strategies, and something that you can just revert back to a lot. All right, so let's see. Trades, can't we be on 3-1 option insanity trades? Can't we be long a cheap OTM option to be able to trade a smaller account size? Yes, you can, Barry, but it's still going to be like, if it's 20, 25 points away, you're talking about $6,000 to $7,500 on the 3-to-1s, right? So it's still, you can do it on like a $10,000 account, no question about it, by doing that. The SPY in the past moved 9 to 10 points this week. How do you prepare for these events? By going further out of the money. That's how you prepare. Like this one, the market can move another 13 points before it even reaches on this 2-to-1 right here. The market can move another 13, 14 points before it even reaches the break-even level. And it has to do it fairly quickly, because if it takes any time whatsoever in doing it, I'm gonna be able to exit this thing at a profit. And like the 2-to-1 that I exited, I was in this thing for 3 weeks. Let me pull it up here. I was in this thing for 3 weeks before I took a $130 profit on it, right? Because the market went from 368 to 380 and nothing flat. So you put it out of the money, and believe me, it gives you a lot of staying power. I have a short 382 expiring tomorrow that was put on at 98 as part of risk-free calendar, but market screamed up. I cannot put on the long. Can I roll into the next week for even money to be part of another bearish neutral pattern? I wouldn't necessarily roll a 382 to try and get a risk-free calendar at 382, because that's at the money. For me, I start fresh. If the market has moved up, then I go higher with my strikes for the following week, and that's the way that I do it. Did I understand you to say you did a presentation on crazy calendars yesterday? If so, is it recorded? Yep, it was recorded, and it was for beginners who haven't ever heard of it, so it is starting from the beginning, but we'll actually have that available on YouTube. I did it for another group. They're the ones that recorded it. They're the ones that put it on, and they're the ones that will give me the recording, and then we'll make that recording available. Do we have access to the spread generator? Yes, you do. Is spread generator is on regular trade partner now, which is where? Where is that? Well, if you pull up trade partner, it is right here, spread pattern. Okay, click on spread pattern. All right. Let's see here. For the buy one, sell 1, 2, 3, 4, 5, does the profit target not work if buy 15 to 20 OTM calls for each one sold? Perry, I'm not quite following. Does the profit target not work if I buy 15 to 20 point out of the money calls for each one sold? That is correct. Your profit, if you pay too much for those margin hedges, which is why I don't like doing that. If you pay too much for those margin hedges, it does eat into that. You know, obviously, if you pay 10 cents for a margin hedge on a 90-cent credit and a 2-to-1, you're down to 70 cents. That's your new credit, 70 cents, right? That's not too bad, but once you get up to the 3, 4, 5s, then then you're in trouble. You're not in trouble. You're eating into the profit quite a bit. It's like a commission. Can I send out some of these spread pattern templates? Yeah, I'm actually creating. They're actually creating the ability to have these templates. So all I have to do is say, show me calendar spreads within 10 points of the money at the money for this date, and it's already going to have it in there, and I just pull it up and it'll show all that. I I'm waiting on programmers to do everything, so I don't know when that's going to be available, but believe me, I want it, and I want it badly. So it is pretty high on the list. Is there a reason why you wanted to do the crazy calendar spread at the 2528 dates instead of 12921? John, looks like you. I don't know when you asked that question. But it was after I explained it. So I actually answered your question before you asked it. So the question is, why would I do the 2528 versus on the crazy calendar 2528 versus the 12921s? And the reason is because the same crazy calendar was trading at a debit of 7 cents. Not a credit of 31 cents. That's 40. That's basically almost 40 cents of time value that I am missing out on by not doing the 2528. Where if I go 1 week further than that, the 212, 216 actually only have about 12 cents of time value that's available. So I am much better off from the standpoint of time decay doing this one. And so that's that's how you choose which dates to do. Can you show us the best trade which could be implemented with a market moving fairly quickly, but not knowing which direction would the move would take place? Boy, you are asking a lot there. The question is, could you show the best trade that could be implemented with a market moving fairly quickly, but not knowing which direction the move would take place? I'm going to say no. The market has a much easier time to make a quick move down than it does a quick move up. Reasonably speaking, obviously, like yesterday, it made a 600-point move higher at one point. I've seen it move 10 points higher in a day, But once it makes that move, it usually slows down to the upside, right? So that's how I play it. If you're thinking that the market's going to move down, which I think it very well might get, this is why I put on this particular trade. Right. Nope, that's not it. That's why I put on this particular trade right here. Is because if the market does move down, I'm going to make $750 on the trade. Right. So that's why. Carl, you and me both. All right. If the guy can't find the pattern generator, tell him to log out. Oh, yes, that's correct. So if you have not, let me show you. Hang on 1 second here. Where are you, Mr. Magoo? Here we go. All right, so ding, 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 ding. All right. So if you don't see the spread pattern, I want you to click on your username over here. And I want you to hit reset local storage, and then log out and log back in, and it will show up at that point. The spread pattern will show up right here if you're not seeing it right now. Thank you for that clarification, John. Appreciate it. Are you planning on publishing your 2021 trading plans for various account sizes? I might be doing something more than that, and that's all I'm going to say about that one for now. Thanks for the great meeting. You are welcome, Carl. One person. I do want to mention this. I got another comment from a person. Been attending these calls since, I don't know, maybe August-ish. And he would start putting on some of the trades, and he'd lose a little bit of money. He'd put on another trade, and he'd lose a little bit of money. Put on another trade, lose a little bit of money. And he gave up. And then he heard when I said, listen, if you're not experiencing success, you might be trying to do too much. You might be trying to do too many things. You might be trying to do too many different things. Pick one thing, high probability, put it on, and take a high probability profit target. That's what you need to do. And so he said, you know what, I'm going to do that, because he'd basically given up. And so starting in November, he started doing that, and he sent me a note the other day. He hasn't lost on a trade since. That is great advice. If you find yourself not seeing your account increase, by the way, I've doubled an account since mid-November. I've doubled one of my accounts, being very conservative. So if you're not experiencing success in this, that's what you need to do. You need to simplify, pick one higher probability trade. That means going further out of the money, and put that break-even level way out there, and then have a high probability profit target, and then rinse and repeat. And the more you get into that flow and rhythm, the better you're gonna be able to place that trade, and then you'll be able to add something to it, a different variation, better efficiency, et cetera, et cetera. All right. Carl, take your choice. I mean, all of these have high probability, high probabilities. The question is how high of a probability do you want, versus the credit that you want, right? So we will take a look at more variations of crazy calendars on Monday as well. All right. Looks like I got all the questions, and we're a little bit over time. That's fine. But I will see you guys again on Monday. Hope you enjoyed the call, and y'all have a good day and a good weekend. Talk to you later.